announced. The highlights, of course, being revenues from operations at 118.65 crore rupees as against 79.8 crores year on year. PAT 21.5 crores. What would you say has contributed to this increase?
Yeah, in fact, we were committed to expanding outside Kerala, and we have gone into northern markets, into eastern markets. We had a very huge headroom as far as our top line is concerned, and we went to all the markets wherever we could go. Another important factor is that our flagship company, which has got more than 3,500 branches across the country, we've been able to do quite a bit of numbers through them. The growth through their channel had been more than 50%. So overall, if you look at our expansion plan, we are on track. Secondly, all our digital initiatives is now bearing fruit. We've been able to increase the productivity of our team. We've been able to contain the costs. So in terms of our bottom line, we have shown about 78% increase compared to last financial year. Overall, whatever we had said in the beginning of the year in terms of expansion, in terms of our digital initiatives, is now yielding us the dividend.
You, of course, also had got a thumbs up from the stock markets. But, Madhu, I'm talking to you at the start of a new financial year. What is it that we can expect from you in FY19? Can you provide any guidance to ET-Now's viewers who may also be your minority shareholders? We're also talking on a day where there are reports of ATM machines running dry, cash, there being a cash crunch. How worrisome could that also be for a company like you?
See, we have believed in focusing on BOP, bottom of the pyramid segment as a vision of our organization. We have focused, and we had been able to establish our distribution in those areas like Tier 3, Tier 4 cities in rural areas. And as a result, we had been able to, show the kind of growth that that is much better, much ahead of the market. If you look at last year growth, we have grown our book by about 55% to 2,238 crore, which we believe will continue this momentum, and we expect to be around 3,200 crore next financial year. Top line also, we expect that we'll grow by about 40% year-on-year basis. So this is the overall guidance that I can give you right now. But in terms of economy, in terms of how the market is looking like, we are very optimistic that this year we'll continue to grow the way we have grown last couple of years.
Mr. Madhu, Siddharth Bhamre joining in conversation. Let's talk about your margins, and not just related to this quarter. Last couple of quarters, as interest rates went up, yields went up, a lot of NBFCs had tough time dealing with margins, and markets reacted negatively to all most of the NBFCs, if not all, citing that the business model is vulnerable to higher hike in interest rates. I want to ask you and want to extract from you that how is your business poised when interest rate change? What is the impact on your margins if there is a 100 basis increase or decrease in interest rates, and what is your outlook on margins going forward?
See, I can tell you that last entire year we've been able to bring down our cost by about 1.5%, which was a fantastic job by our treasury team. We are not kind of worried as far as interest rates are concerned this particular financial year. Secondly, the segment that we operate, we are very comfortable dealing with those customers, and the yields that we derive from there is enough to ensure that whatever we commit in the market in terms of PAT, in terms of our growth in AUM, we would be able to deliver that. We have a very unique market that we operate through our network of flagship branches. We have our own way of reaching BOP customers. So we are not unduly worried as of now in terms of how the interest rate is going to behave, because we have sufficient room, sufficient headroom to play around and continue this kind of PAT and growth.